Welcome back to another video. I have not made a YouTube video in about 3.5 months, a little bit over 3.5 months now. So it feels pretty weird, and this is going to be nothing fancy, not like a lot of the other videos that I've made on the channel. I'm just gonna sit down and talk about, hitting $100,000 in the portfolio. Since I stopped creating a lot of content, we did hit $100,000 in stocks. So I want to talk about that. I want to talk about sort of the journey that's led up until this point and what I've learned along the way. It's been, at least for creating YouTube videos, we've been working towards this goal for about a year now, a little bit over a year actually. I don't even remember when I started making videos, but and then personally, it's been a goal for almost like 6 years now. And I've been through lots of market volatility, a few crashes of what you would consider crashes. I've seen my portfolio go down $17,000, $20,000, and I've just experienced a lot of volatility, a lot of ups and downs, a lot of things that I have made mistakes on and I've lost a lot of money with. So I'm just here to kind of share my experience and where I've seen success, where I've made mistakes, and hopefully you guys can learn from that. And yeah, I do think that anybody out there watching this video can do it. If my dumbass can save and invest money and get a return on that money, then anybody out there that's listening to this video can do that as well. I promise you that. And yeah, I think when it comes down to it, it's really not that complicated. I think if you boil it down, there's like a few core concepts that you have to understand. And as long as you understand those, and as long as you're disciplined, and as long as you're patient, and as long as you stay invested in the market for the long term, then I think anybody out there watching this can build a successful portfolio. And I want to talk about some of those concepts right now, because looking back, they're probably some of the biggest things that I've learned up until this point with investing. And yeah, when it comes down to it, like step one, the first thing that you have to understand and the first thing that you really have to think about when it comes to the stock market and self-directed investing is like your personal, like the personal finance side of it, right? And it doesn't get talked about online that much. Because it's really like the boring part of it. It's not flashy to talk about creating a budget every month and sticking to that budget, right? But that is what gives you the foundation in your portfolio to really build it in the long term, right? Like how much money do you make in a month? Like what is your actual income? What is your expenses? And your focus should be increasing your income, your monthly income as much as possible, and decreasing your monthly expenses as much as possible as well. And then having as much as you possibly can to put into investing at the end of the month. That is, like, I can't even understate how important this part of the equation is and how little it gets talked about online, because it really is like the boring grind when it comes to investing in the stock market. But you also, this is where you like decide how you want to live your life. Like, do you want to go out every weekend and fucking party and pop bottles in the club and buy nice shit and spend everything that you make? Which is, if that's how you want to live, then I got no problems with that, and go for it. But it's how you have to decide how you want to live your life, right? And everybody's different. And I do think it's important to have experiences and go out with friends and get drinks or go on trips or buy things that you invest in activities that you enjoy, because that's really what makes the whole journey sustainable in the long run, and it's what is ultimately going to actually help you build long-term wealth or build a successful portfolio in the market. And I think it's something to think about, right? Like you have to save money at the end of each month, whether it's $10 or whether it's a couple thousand. Like if you're starting out and you're saving $10 a month to invest, perfect, right? Like start there and then build from there. Try and figure out how you can increase that number over time. And everybody starts in a completely different place. Everybody is in a different situation when they start out. I've been like pretty lucky. I just live at home, and I've managed to keep my expenses pretty low because I live with my parents, and maybe not for long, but that's been part of the reason that I've been able to do it, right? There's also I've also been very disciplined with my finances, and I've educated myself a lot on the market. And you can see that by how much energy I've put into learning about how the stock market works and how market cycles work and how often things crash and when you might want to buy a stock and how you want to allocate your portfolio and on all those things. But just when it comes down to it, the first thing that you want to focus on is how much money can you save a month? And by focusing on that, you really have to decide how you want to live your life, right? And make it a sustainable journey. But from the investing perspective, it is going to be the best outcome if you're more strict with your spending. So yeah, just step one is learn personal finance, make a budget, follow the budget, save money, and now you have money to invest, which I would call step two, which is what do you actually do with the money that you saved at the end of the month, right? How do you decide what you want to put it into? Like, do you want to buy stocks? Do you want to buy ETFs? Do you want to buy whatever? And then how do you want to allocate that? And to decide that, I think you could look at your current understanding of the market. Like if you are brand new to the market, honestly, what I would do is buy ETFs or buy like one or two ETFs in your portfolio and just wait a little bit. Like I wouldn't start out by just buying stocks off the bat, which is what I did, but I also lost a lot of money like pretty much instantly when I started investing. So, I would recommend if you have a high level of understanding in the market, then maybe you can dabble more so with some stocks. But if you got to have your personal finance side of things locked in. And if you have that locked in, then, look at your risk tolerance and your current level of understanding of the market. And how I would start, honestly, is like a 50% of your portfolio, buy VOO, buy some S&P 500 tracking ETF. And then, if you want to get into individual stocks, then I would layer individual stocks on top of having a couple ETFs. It just provides you with a level of safety and a level of diversification, which I think helps. If you want like hyper growth and if you're ready to take on more risk, then you could lower the amount of ETFs in your portfolio and increase your exposure to individual stocks. But how I would start if you're brand new and you're just starting to learn about the market is honestly, I would start with ETFs. And then once you're comfortable with that, once you know how that you can confidently funnel money into the market every month, then I would move to, individual stocks. Because once you get into individual stocks, you do need a higher level of understanding of how to analyze a company's financials, how to run projections, how to understand their product, how to understand their market, how to understand just the economy in general and market cycles and, the effects that interest rates have on the stock market. So, if you don't have a lot of that deeper knowledge when it comes to investing in stocks, then I would just buy ETFs, man. It's a really chill, simple strategy that I do think works. And when I look at my portfolio, like one of the highest things that I have a return on is VOO. Like I do have, like for me personally, I think it's good to have some exposure to stocks because Palantir really did put me onto that next level financially. Like I bought 200 shares of Palantir at like $8 a share. And like, I think I looked today and it closed at like around $160. And I've been selling that stock all the way up and chipping away at that position. And now it's still one of the bigger positions in my account, but and I wouldn't have been able to take advantage of that opportunity if I didn't give myself some exposure to higher risk assets like a Palantir or like a growth stock, right? But I do think it's a good idea to have a foundation of a well-diversified ETF, just so you don't like lose all your money instantly. And if you're more experienced, then you can definitely, dabble with higher risk assets, but it's not where I would start. And especially with something like day trading or crypto, honestly, guys, I think fuck day trading and crypto if you're just starting out. And that's just my personal opinion. I think a lot of people would probably disagree, maybe, but try to make consistent money with day trading. Like, good luck. It's it's not going to happen. And maybe you get lucky and maybe you make some good money at the start, but try to create a replicatable process and build long-term wealth with that. Like, the more that I've got in and out of stocks and tried to time the market and play the market, the more money that I've actually just lost, and the worse my returns got, and the better they got, the more I just bought and held quality companies in the long term. So that's what at least I have found works for me, and that's the message that I try to talk about and give on this channel, is just buy and hold ETFs and stocks and do it for the long term, right? And that's really like step 3. Like, step 1, figure out your personal finances, save money. Step 2, what you do with that money. Step 3, and this is the hardest step. Trust me, I I fully understand that this is the hardest step in the whole process, but wait. Be patient. Time in the market beats timing the market every day. And it's been proven to me time and time again that it just pays to be to stay invested even when the market's volatile, which is really hard to do. Like I've gone through periods where I've seen my portfolio go down like 17,000, 20,000, like I said at the beginning, and it's pretty hard to stomach that, right? Like, you lose, like, your portfolio goes from like 80,000 to 60, and you're like, what? Like, did I just make a serious mistake? Am I never getting that money back? And then, it always comes back eventually. And think of it when the market's red, stocks are going on sale. As long as like nothing fundamentally changes with what you're invested in, because like, and that's why it's a good idea to also have a relatively limited amount of stocks in your portfolio, so you can kind of keep tabs on all of the investments that you have. Because if something fundamentally changes with that direction of that business, that's really the only time I would sell a stock. Like, I wouldn't sell a stock if like some bad news comes out that will be gone in a week, even if it like really hits the stock price like in the short term. But treat those as buying opportunities, because they do come around every now and then. And when the market's red, think of it as stocks are going on sale. That's literally the best way that I've heard to think about it. And it's something that I definitely agree with. So, I mean, that's pretty much it. I mean, at a high level, like it is a pretty simple process, right? Save money, invest the money, wait. That's it. That's all you got to do. And you just like got to do that for the long term. And it's very, I guess it's simple, not easy. That's one of the sayings that I like, because it really is simple, but it's not easy, especially when you're going through volatile times in the market. It's not easy to save money. It's not easy to like not buy all the things that you want to go buy, right? And yeah, I mean, that if you just implement that, then I think anybody watching this video can really build a successful portfolio and work towards more long-term wealth, Also, kind of random, but check out this knife. I don't know if you can really see it, but it's like a black and gold knife. Anyway, that was really random, but kind of sick. Anyway, sorry, I'm getting distracted. But yeah, I mean, that's pretty much it. It's stepping kind of outside of investing. Like another couple takeaways over the last 6 years is that, it's not everything. Like focusing on the stock market and building wealth, it's not everything. Like having quality relationships in your life and having activities and people around you that you enjoy, that part is just as important as focusing on your career, right? And also being healthy and being fit it's kind of like those three things of like have quality relationships, be healthy, and then you can focus on your career and money. And sometimes those things like reorder themselves, right? And I've definitely gone through seasons, I guess, where the top priority is like career and focusing on how much money I can make. And I've gone through long periods of that, if I'm being completely honest, right? But it's not everything. You have to decide how you want to live and do anything that you can to make it a sustainable journey. Like, don't burn yourself out on trying to save money. Like, if there's something you want, go buy it. That's what, money's for at the end of the day. And, still try and save as much as you can, but also enjoy your life. That's, I think it's an important part that it's easy to forget, especially when you're just starting. But maybe I think also everybody kind of has to go through that and figure that out on their own. So yeah, I mean, best of luck with, with your own journey. And for anybody out there that has also built up a portfolio or has been investing for a long time, I'd love to hear what your experience is and what your main takeaways are after a couple of years of doing it. I've been learning about the market for over probably like 10 years now. And it's been it's been a journey, man. Like I've kind of gone through focusing more so on the income lately. Like I got a new job. That's where I want to really focus on going forward and, provide value there and develop high, very valuable skill sets. And because really at the end of the day, when the more money that you have to invest, the bigger the returns are going to be, right? So that's pretty much what I wanted to talk about. Hopefully, I'd love for you guys to leave a comment on what your personal experience has been investing and where you're at and where you want to be. I feel like I am just getting started. We hit 100K, but I'm ready to make a video about 200K, 300K, 500K, and then eventually $1 million portfolio. So don't expect many videos going forward, honestly, for the next little while. I'm just focusing on life a little bit, I guess. And not to say that I'm never going to come back and make content, because I do like just kind of sitting down and talking to the camera and it almost clears my mind a little bit when I'm thinking about all of the financial stuff and business stuff that's going on. It really is kind of it just helps. And honestly, I'd recommend anybody out there do it as well, because I think it's helped me develop skill sets that has, led me towards higher paying jobs. So anyway, let me know what you guys are, where your portfolio is at, what your plan is, what your experience has been. Thank you so much for watching. I wish you the best of luck on your investment journey. Check out this cool knife. Peace.